Hey everyone, welcome back to the channel. If you are passionate about investing and are always on the hunt to elevate your portfolio and take the gains to the next level, you are in the right place. Make sure to hit the subscribe and turn that bell notification so you don't miss out any interesting content. Today we are thrilled to have a special guest on the show, Rhind, the CEO of GraniteShares ETF, a company at forefront of offering unique ETF that caters to different needs of the investors. Whether you are interested in commodities, high income, or just innovative income strategies, GraniteShares has something to offer to all kind of investors. In this interview, we'll dive into how retail investors can utilize GraniteShares ETFs to diversify their portfolio, align with their investing goals, and navigate the ups and downs of the market. We have some great questions lined up for Will, and we are eager to get Will's experts' insights into it. So without further ado, let's get started.
All right. Hey, Will, do you hear us okay? Got us loud and clear?
I can hear you fine. Can you hear me?
We got you. Glad you could join us.
Great.
Thanks so much for being able to take some time today and talk about GraniteShares. And so again, we've got Will Rhind with us with GraniteShares. These are ETFs that I am getting more familiar with myself and really excited about, quite frankly. There's two different types I'd love to get into with you, Will. Before we do, just a quick introduction here. These are my co-hosts, Sean and Kaye. And so we'll be all asking you questions, as we go. But Will, if you don't mind, give us a quick kind of overview of GraniteShares and what we can expect with them.
Sure. No, thank you. And thank you for having me on this afternoon. Great to talk to you guys and everybody else. So we're a ETF issuer. So that means that we're an asset manager that just specializes in building, launching and managing ETFs or exchange traded funds. So we have a range of funds here in the US, mostly traded on the NASDAQ. And then in Europe as well, we're active in the UK market, the Italian market, French market, and in Germany as well. So we like to think that we build ETFs for high conviction investors. So that means that the types of ETFs you're going to find from us are typically more racy than your kind of grandmother's generic, S&P 500 ETF or fixed income ETF. So we have leveraged ETFs on single stocks, a lot of the stocks that you guys know and love, and that's here in the US and in Europe. So the company, we manage about 4.2 billion, something like that. And yeah, these products have become very, very popular and are sort of popular really around the world or anywhere that people can access a stock exchange through a trading app these days.
It's good stuff. And I gotta tell you, the diversity of the types of offerings you have, right, with the basket of holdings and also the single stock ETFs and being able to take position either way, like that's really, we're all traders here. We've got over 3,000 people tuned in our audience, all traders as well. And I think, we talk both long-term investing and short-term. And so these ETFs really kind of get our interest quite a bit. So I'm glad you could be on to kind of talk through some of these with us. And by the way, those of you in the audience, whether you're tuned in on the Trading Triangle or Wolf Financial on YouTube or on X live stream, be sure to drop in any questions you have as we. As traders, some of these ETFs no doubt are going to get your interest and you want to look into these. So let's start though with some of the basket ETFs. One in particular that I like that has really got my interest, Will, is DRUP. You're a disruptor in ETF with the innovative stocks in there. What I like about it is it's not, it's like very complementary in my opinion to something like the QQQs, which is something I have shares of and want to add to more tech positions, more growth positions, but not just keep piling in the same name. So yeah, if you don't mind kind of breaking down that ETF a little bit for us, I'd love to hear about it.
Yeah, sure. Thanks, Nate. So the idea with DRUP or DRUP, as it's called, so nice. Shorthand is a shorthand for disruptors. And that's the top 50 most disruptive stocks in the US market selected by NASDAQ. So we work with NASDAQ to create the methodology around the index for this particular strategy. So this is not a leveraged strategy. It's just a 50 stock portfolio that aims to provide exposure to the top disruptive stocks. So in terms of why disruption in particular, the thesis around this is that disruption is not a known factor, like, for example, value is a factor or growth is a factor or momentum is a factor, but yet disruption is one of the most, probably the strongest or most prevalent forward-facing risks that we all face as investors, because we can't sort of bottle it and have it as a factor sitting alongside our traditional ones. The idea is, can we try and create a factor for disruption, and can we try and invest in this phenomenon through his portfolio? So to do that, we have 6 factors that end up becoming the strategy. So we score every company and we weight them according to these 6 fundamental factors, and then the top 50 stocks get selected into the portfolio. So when you have, for example, one of the factors is the value of a company's patent portfolio. And so you may think, okay, well, what's the sort of significance of that? Well, it turns out that, disruptive companies have not just large patent portfolios, but they have valuable patent portfolios. And so we want to measure and ascribe value to those patent portfolios, because typically, if you have a large and valuable patent portfolio, that might mean that you have a significant moat in a particular sector or an industry, or a quasi-monopoly type position. And those are the businesses that we like to invest in. So it turns out that NASDAQ owns a patent valuation company. And so that's one of the companies that we use to value stocks. It's a very unique process. And then because we're investing in innovation, we want companies that are growing quickly, but yet we don't want companies that are growing at all costs. So the big lesson, obviously, from the last few years with the likes of Cathie Wood's ARK, et cetera, was, you could get, fantastic returns, in an environment where we had, tons of liquidity in the market and 0 interest rates or negative real rates. And you could invest in companies that were growing like crazy, but they were never making a profit, or maybe never would hope to make a profit. And so we want to make sure that we don't invest in those companies, because the lesson was, when the market repriced itself, when the Federal Reserve started raising interest rate, those companies all got smoked. And so we want something that's sustainable, something that provides disruption, provides innovation for the long run. So there's a hint of quality in there as well. So that's why, when you look at some of the holdings that we have, that when we talk about the factors that we value and that we use, you'll see things like profitability in there, because we want to make sure that, yes, the company is super disruptive, it's got a valuable patent portfolio, it has the growth that we're looking for, but it's also profitable, and there's a quality tilt in that as well.
I love it. This is great stuff. And that ETF in particular caught my attention. And the holdings, like just taking a look at, you've got names that are familiar, of course, but then you start getting into, it's a nice mix, right? I see names, Kaye, names we talk about all the time: Salesforce, Meta, Adobe, right? And then, of course, the Microsofts and Alphabets mix in there. I mean, it's right in the lane of what we talk about, is both long-term and short-term trading.
And I think the kind of the cool thing about it is that a lot of these funds, what you'll see is it's just another Magnificent Seven fund in disguise. And the beauty about this is that actually, we don't have NVIDIA. So the performance on the fund has been amazing. And, you put that into context where we have not owned, a stock that is more than doubled in market cap over the last, 12 to 15 months, that in of itself is a phenomenon. So, there's some very specific reasons for that. But ultimately, I think providing that portfolio, which, as you said, Nate, at the beginning, works as a complement. But for any investor in technology, any investor in innovation more broadly, this can be a valuable, addition to the portfolio.
So I have a question for Will, if that's okay, Nate.
Yeah, jump in, Kaye.
Hi, Will. So my question for you is, what should retail investors consider when selecting a GraniteShare ETF that matches their investing goals? So what would be a couple key points that you would want to suggest that we should look into? Because we have a lot of options on the GraniteShares platform, And so what should be the key points that we should consider as a retail investor?
I think it depends on, it all depends on your level of sophistication, right? So I would say we have funds which, I heard you guys talking about gold, for example, before I jumped on. We have a gold ETF, which is this literally physical bars of gold in a vault. So it just tracks the gold price up and down. Very straightforward, very simple strategy. Just provides exposure to gold. So that's a very simple way for people to get that exposure without claiming the risk. Obviously, is the gold price goes down, but beyond that, it's a very straightforward strategy. And so something like that would be probably the easiest strategy that we do, most simplest to understand. Then you've got something like the DRUP that we just talked about, which is ultimately a US large cap equity portfolio. So you would expect, all things being equal, that by investing in that, the performance is going to be in or around US large cap equities, so the S&P or NASDAQ. So again, depending on your sort of investment horizon, that's also something to consider for either a longer term investor or a short term. And I think the only sort of distinction I'd make is when we talk about the leverage products that we have, then by definition, that's something that people just need to understand in terms of how the leverage works. And I think level of sophistication, clearly you need to understand the risks involved in using leverage. And so typically those are short-term strategies or more short-term than just, putting DRUP in your portfolio and forgetting about it. So there are sort of different things to think about perhaps, but I would say, maybe the easiest way to think about it is split our offering into leveraged funds and unleveraged. Unleveraged ones are going to work very similar to any other fund pretty much you own, which is you can typically buy and hold these forever. The leveraged funds I think are really designed more for short term, and people should understand, how they work and obviously how to incorporate that in the portfolio.
Yeah, I think leverage for me is a massive appeal, especially for GraniteShares. Hi, Will. Sorry, I'm going to say hello.
Hi.
For me personally, I've actually traded your shares on my broker. I use trading 2-on-2 over in the UK. Just
great.
thank you for the opportunity to obviously trade with your shares. It's a real pleasure. It can be risky at times, but obviously for me, in terms of leverage, I tend to do it on a kind of daily basis, sometimes a bit more of a swing traded basis, depending on the asset, of course. So I just want to add that kind of knowledge and kind of user experience, at least from my side. So yeah, cheers, Bill.
Thank you.
Yeah, that's a great segue, you guys, because and Will, you really outlined it perfectly. There's the two kind of products you have, the leverage and non-leverage. And yeah, and we were talking about the non-leverage. I think getting into the leverage, especially for all the traders that we know tune in, and like Sean was saying, we talk about these daily trades, swing trades, and we get into options, right? We trade options as well, but then not everybody has access to trading the options and so on. And then also the level of sophistication needed to trade options, wisely is also, there's a bit of a learning curve there. And so with leverage ETFs and these single stock leverage ETFs that you offer, for me, it does actually bring some simplicity to being able to trade with some leverage without getting in over your skis, I guess you could say. So, but at the same time, there's things to be aware of, right? Like there's definitely a way to utilize these leverage ETFs. So I would love to hear a little bit from you as far as how you guys really got into, because we've got leverage ETFs for NVIDIA, AMD, Apple, Tesla. These names are great, right? We highly liquid, so traded quite a bit, and you've got them both directions, right? We're at a spot now where maybe people are looking to take short positions, and you've got those opportunities. So yeah, if you can help us get a little bit more knowledgeable about these ETFs, that'd be great.
Yeah, sure. So we offer quite a wide range. In the US, a narrower range because it's a little bit newer than the ones in Europe. So Sean might know that in Europe, there's a lot more choice. In terms, we've got over 100 products of anything from UK names to US names to Italian names, etc. So a lot more variety than we do here in the US, which is typically just the largest stocks. Also, the leverage factor is different. So typically in Europe, we do 3x because that's what we're allowed to do in Europe. Here, we can only do maximum of 2x. So that's also a differentiation. But yeah, I mean, the idea here is to try and offer the stocks that people love, the stocks that people want to trade, both the long term, the short term, and really curate that portfolio for people. And it's a combination of not just kind of stocks that are highly traded, but also typically we like ones where you're providing a solution as well to something that doesn't exist. So, for example, when we launched, CONL, which is or CONL, which is the ticker, which is our 2x Coinbase ETF, that here in the US at the time, there was no spot Bitcoin ETFs. There was no way for people to trade, Bitcoin directly with an ETF, let alone a leveraged version of that. So it was kind of a nice way to provide a proxy to that market and give people exposure to the volatility of the crypto price, without having to directly participate in it. And then you have, stocks like Alibaba, where it's the ADR, the US traded ADR. So again, provides exposure to China and Chinese tech. And then you have clearly the major names that everybody knows and loves with NVIDIA, or NVDL, which is that's actually the biggest now levered single stock ETF in the world. So just being a monster with all the crazy stuff happening with AI.
Yeah, that's incredible to see that, and congratulations, by the way. I mean, obviously there's a lot of interest, right? And I can tell, but just by our audience count, by the way, which continues to tick up as we talk. So yeah, these ETFs, I think, are just providing more opportunity for traders to get involved with these names, and then that added leverage. Just from a trading standpoint, I mean, we're always looking for ways to find a little bit of leverage, a little bit of advantage to take our gains a little bit higher. And, these are answering them. I think that's exactly what you said. You saw that there was a need and kind of answering the mail there. Sean, if you don't mind, and throw it back to you. What names did you, if you don't mind me getting into a little bit, you said you trade some of these tickers, and do you use it for both upside and short side? If you don't mind, give us a little insight on how you use the GraniteShares ETFs.
So I go obviously alongside. I'm kind of
I thought
3x
you
leverage.
might.
Yeah, you know me. And I kind of pair it to the actual chart of the actual stock, for example. So let's take Coinbase as an example, as you mentioned there, Will. So if it's hitting a certain support line, I'll then actually enter the 3x as a consequence. So obviously then I would basically triple my gains if it went up. But of course you triple your losses if it comes down. So that's kind of how I look at it, kind of really fundamentally, kind of looking at the normal chart, and obviously playing it along with the leverage ETF. So yeah.
Nice. So you're watching both the underlying as well as the leverage charts, and kind of paying attention accordingly. And then it gives you, so Shawnee, we talk about this, you're trading shares. And so this gives you an opportunity to, if you have additional confidence in the trade, I'll say, to really get in with more than just, adding to your share position necessarily, but being able to take advantage of these types of ETFs.
Yeah, of course. And I think for me, for my actual day trading account, it's actually 5x leverage in terms of the way it works over here in the UK. So it gives me a little bit more of a less risk in a way. So it's kind of basically taking that element of risk away. I know it's a 3x and the risk is there, but for me, it's actually taking a step back as well sometimes. So I kind of, it's a case by case basis, of course, and obviously different stocks. But yeah, it's a really interesting kind of way to trade. Yeah.
Yeah, some flexibility there. Kaye, did you have any questions for Will? Are you going to utilize these ETFs if you haven't already? Because I know we talk options quite a bit.
Yeah, no, definitely. So, Will, looking at the leverage ETF list, I see one of the stocks from the Magnificent Seven is missing, Netflix. Is there a reason why you did not put that on the list here?
Yes, it's funny. We had it in Europe, and I guess Netflix went through. So we launched our business end of 2019. So Netflix sort of went through that difficult period where people were saying, "Oh, it's no longer a FANG stock," and obviously that was the sort of the acronym of the time. And it went through a bit of a challenging time, and probably went out of favor a little bit with a bunch of investors. So we never really saw much traction in the name, to be honest with you. So that definitely would have influenced our thinking in terms of bringing that here. And of course, as other streamers have kind of fallen away, and really it seems like now in streaming there's just going to be two names, and that's Netflix and Disney, and really everybody else just can't afford to stay there. And so Netflix clearly has has been on a tear kind of late. And I think that will sustain itself. So it's definitely something we can look at. But it was probably unfortunately influenced by that sort of negative patch when everybody was trying to jump into the streaming market a few years ago.
Yeah, interesting take on that. Definitely, I think Netflix in the last, I think 2021 to 2022 was like the bottom for Netflix. And then since then, they have been on a tear since the subscriber growth really increased. And then on top of it, when they launched their, what is that called? The ad platform where, basically.
The freemium. Is it
Yeah,
freemium you call it? Yeah.
premium. Yeah, exactly. That's the word. So I really think that, overall, we are seeing a nice trend on Netflix. It's almost like close to its all-time high with 700 coming along very soon. Hopefully, we'll see. But that's interesting to see here.
Yeah.
So Will,
Maybe if I launch it, it'll be the all-time high, which is never a good omen when you launch a fund and stocks at an all-time high.
that I imagine is a tricky spot. I was gonna mention or ask, I guess, because we're talking about different ETFs that might be coming down the line. Both, how do you select? And you kind of touched on this, I think, but maybe get into how do you select the different ETFs, because it's obviously it's not like something you just go and throw up new ETFs every day, and there's not big costs involved, right? And then as far as if you have to actually move away from them, is there factors that cause you to shut them down? And is there anything in the pipeline that we should be looking forward to that you can talk about? I realize you might not be able to discuss.
Yeah, I mean, in terms of how we select it, it's more of an art than a science. We try and match, what we think is demand in the market, for names that we want to bring, and that's the sort of, I suppose, the philosophical point where clearly you want to bring names that people love and do you think there'll be a lot of traction in. But then there's a practical point, which is because we're adding leverage, we have to get that leverage or source that leverage from typically large investment banks and broker dealers. There's a practical side as well, which is some of the more crazy stocks going to be much difficult or more difficult to finance. And so therefore it might be the case that we know there'd be a ton of demand for a particular name, but from a practical perspective, we just can't get the leverage on it or the short on it because it's impossible to borrow the stock without the cost just being crazy. Right. So there are those kind of considerations, and that's why we try and bring stocks that will be large enough to be sustainable, but yet carry that appeal, and/or, like I said, that provide a solution to something that where there's an investor problem with market access or something in the market. So it is a little bit of an art, to be honest with you. And then obviously we get feedback. We get a lot of people that just come to us directly and say, "Can you do this? Can you do that?" And clearly, from a sort of crowdsourcing, if you want to call it that, non-intentional crowdsourcing, that you get a feel for what people want and what names are interesting, and then we can look at those and try and bring those out. So we have a bunch of names that we would like to do, and like I said, maybe some won't surprise anybody probably on this call because there'll be more in the maybe it's the semiconductor type area, in the tech sort of arena more broadly, but then others aren't. And I think it'll be nice to bring out some single stocks at least that are on more traditional companies like energy companies or airlines, etc., where there's still a lot of interest, but it's not AI.
Yeah, that is interesting. You get our attention with the energy names. We talk energy quite a bit, and I like that you're looking. It makes a lot of sense that a lot of these names are around tech and AI, so to speak. But the fact that you're able to kind of keep your eyes up and looking for opportunities across different spaces. What I heard is you're looking for basically where are there needs for solutions, and then where's the actual recognition, like, hey, yeah, we want this solution. That's where the demand comes in, right?
And candidly, as you guys may or may not know, but the only way we make money is on the management fees. So we charge like a small percentage of the assets, just like in any fund. So we don't make money on the trading of those shares in the market. We don't make money, on commissions or anything like that. It's purely just every dollar that's invested in the fund. We make a small percentage of that. So for us, it's got to be, we got to think about names that can add assets that would be really popular. So like NVIDIA, for example, has been super popular and it's become really the global stock, I think, for AI. And then the reverse side of that, Nate, is in terms of why or how we'd consider shutting a fund down. It's just the economics of it. So clearly, each fund is like its own profit center or its own P&L. So if we were launching, or if we have a fund that is not at break even, then that's something we have to consider in terms of shutting it down. And a lot of that is just dictated by the market. So the market very clearly will show you after a good period of time. So it might be 12 months, for example, if there's no demand in a particular name and it's not anything sort of fundamentally to do with the name. In other words, there hasn't been just something horrendous happening with that company that's just had 12 months of sheer pain that is abnormal, and we think that that's likely to end. That if there's an economic decision, we say, look, we tried it, nobody was interested in the name, we'll close the fund down and offer something else that people will want.
Yeah, that seems pretty straightforward. I gotta be honest, I kind of like the very simplistic kind of approach, if that makes sense, right? Like, you don't have to, you're not talking about commissions, you're not talking about load fees or anything like you get with mutual funds, for example. And having worked at these funds, like, I'm very familiar with sensitivity around how that impacts performance, right? And so people might say, well, how are you aligned with wanting to get good performance and pick the right? Well, if you have popularity in your funds, meaning that there's demand, then that just naturally works for you because all you're taking is that small fee. And I appreciate
you're perfectly aligned because you're on the same side of the table as the customer. So if our assets go up, that means performance goes up, and therefore we win and the customer wins.
Right.
And similarly, at the other side, if performance goes down, the price goes down, assets go down, the customer loses and we lose. So that's the sort of perfect alignment with ETFs that you have.
Yeah, it's fantastic. So if you guys haven't checked it out already, of course, do your own due diligence. Always recommend doing your own research. But GraniteShares ETFs, right? I'm going to list a couple of these leveraged single stocks we've got. We got Apple long, and is there Apple short? I didn't see the Apple short, but definitely see Apple long.
Not short. Yeah, okay. We probably should have had one given the performance this year, but that's probably a story for another day. But yeah, we typically do long because, again, to Sean made a quick point about it that I don't know, it's just a sort of psychology of the investor, but I think more people just prefer to go long, even if a name is struggling. So it's interesting because what we see more buying activity on, let's say, Nvidia on a down day than on an up day, which might seem counterintuitive. But if you have a big downdraft and NVDL might be down anything from 5 to 10% in a day, we are more likely to see more buying that day than, say, if NVDL goes up 5 to 10% in a day. So I think just counterintuitively or intuitively, depending on which way you're biased, people like to buy a stock still in the hopes that it goes up. And then you'll see that where we have a short, we typically have a short on the names which do attract just such a huge amount of volume that there is room, sort of makes it financially viable for us to offer a short. So Tesla's always been that name. And again, despite the fact that this year would have been perfect, we haven't really seen much traction in our short Tesla, which is unusual because normally you do see a lot of volume and a lot of assets in the short. And then Nvidia, we have one where, again, we've seen a huge amounts of trading volume, but not that much assets. But that's largely because clearly the long of Nvidia has performed so well that people, on the short side, the performance has been terrible. And then on AMD, we have a short as well. So again, it was the idea that there was enough volume, in that name on the long and the short side. So we'll see. I mean, it's something that, again, we look at case by case, but overwhelmingly in our experience, the market is naturally long. And, people will favor, if you have a long and a short, will favor buying the dip on the long versus taking an outright sort of short position, even if it's just for hedging.
So I have one question for Will here. Will, from your perspective, are you also looking at the fintech space or the SaaS space? That there are a couple names that are very popular among retail investors. So are you also your firm is looking at building those leverage ETFs for those names?
Yeah, I mean, if you're talking about anything specifically, let me know. But we look at any name really within reason. And if it's a US stock, it's very easy for us to bring that to market. And again, the practical consideration is just in terms of the financing to make sure the stock's not too crazy from a volatility perspective, that we can provide the leverage on it.
Like couple names that just really comes off the mind. Like one is Palantir, which is very a big a favorite of retail investors.
Yeah.
You have SoFi, you have Square, a Block, as you say. So those are a couple stocks that are also traded pretty well on the option side, and there's generally a lot of volume behind it.
Yeah. Palantir we have, so that's something that I'd like to bring out fairly soon. And the others, I don't know if I have those currently on the registration. I don't think so, but have a look. I know we have Block in Europe, and I think it's been okay, but it's kind of been eclipsed by the MicroStrategy and Coinbase as a sort of a crypto proxy. So it's just crazy amounts of trading in those names. But yeah,
I think
definitely something we're looking at.
Sean will be very happy hearing Palantir leverage ETF coming out soon.
Yeah, it's here in Europe, so I've got it on my broker. I've touched it a few times. Let's be honest.
Yeah,
Nice.
some of the performances, obviously, I mean, as you guys know, has been amazing in that stock.
Very much so.
Going through the list of these leverage ETF names, you're talking about people lean long, typically speaking, and I mean we're bullish until we're not. It's kind of like the way you would kind of frame the trading triangle here. And just looking at the assets under management, you can see like you have NVDL, the 2x leverage NVIDIA long, and then you have NVD if you want to go short. And the assets under management are dramatically different, right? Definitely skewed to the long side. Just a couple of other names, Tesla you mentioned. If you want to go short, it's TSDD. But the long positions, 1.25x long and 2x long, TSL and TSLR respectively, again dwarfing the assets in the short. So I kind of like to see that. I wasn't paying attention to those numbers, but that's great to see.
And even TSLR, you make a good point, because that has been disappointing from an asset perspective, and that's a 2x Tesla. And despite clearly the bad performance of Tesla this year overall, I'm kind of curious, because I would have expected a lot more. Typically, we see a lot more interest just in that stock. So I don't know whether this was the year that the Tesla fans kind of pivoted to AI and crypto, or whether it was something else. But I've been curious. That's been one of the things I've been sort of puzzling at this year, that why we haven't seen more assets in TSLR, which is a 2x Tesla ETF.
Yeah, this is good stuff. All of these tickers are fascinating, and I will say too, we're talking about these leveraged single stock ETFs, and we didn't even touch on BABA. You have BABA and Amazon in here, BABX and AMZZ, but then from a longer term perspective, there's some really interesting things. I'm just going to circle it back to, you mentioned the gold, GraniteShares Gold Trust. That's BAR. In the commodity space, you've got a couple. You've got COMB. For the broad commodities. And then what was I looking at just a second?
Platinum?
Oh yeah, platinum. Yeah, PLTM. Yeah. So I think that's another great way to diversify your long-term holdings if you're interested in any of those. But the commodity space is interesting. Is there a reason why you're
especially now, right?
Yeah, absolutely.
Yeah, I mean, I've been involved in commodity markets for a long time, and it's always going to be kind of a key part of our business. But I mean, commodities, as everybody knows, are quite cyclical, and fell out of favor certainly over the last sort of 12 to 15 months. But oil's quietly been climbing the wall of worry, so to speak, and we briefly went back to $90 a barrel, in Brent. And of course, just this weekend, you have another massive geopolitical situation and potential, escalation of the Middle East sort of conflict. Which, although gold took a bit of a dip on Friday, this could be a good week for gold and for commodity prices, more broadly, when we open up on Monday. So I think commodity prices, again, that's really one of the things which has been making the Fed inflation numbers feel a little hotter or run a little hotter than expected. A lot of that is due to rising commodity prices, which I think have caught some people by surprise. So it's something that, again, is worth paying attention to, particularly, I think, in situations like this.
Yeah, couldn't agree more. And these ETFs are definitely getting my attention. So you guys, Kaye, did you have any additional questions for Will?
No, I don't, but I'm excited to actually look into the leverage ETF for my trading moving forward.
We've had Will on a couple of spaces on Will Financial, and every single one of those has been the same kind of sentiments. Like, I'm really excited about looking into these. Like, I didn't realize all of these leverage ETFs are on the table. So I'm glad we're able to take some time to talk about it. And Will, you making yourself available to answer questions and kind of get into the nitty gritty is huge in my mind. Like, you don't get that opportunity with every investment vehicle that you're looking at. So I do appreciate that. Sean, did you have questions? Any other additional questions? You're just going to go back
questions.
to trading these?
No, I'm looking forward to. I'm looking forward to very much DRUP.
Nice.
That really excites me. I'm looking forward to what you've got coming in the future along those kind of lines as well. So, yeah, no, thank you very much.
Yeah, Will, is there any additional things that we didn't touch on about GraniteShares ETFs that we should hit on? By the way, I think we set a record for our audience this week, so I appreciate everybody tuning in. There's definitely a lot of interest there, so good stuff. But yeah, what else would you like to add before we wrap up here today?
I think, look, I mean, the range of products we have, I mean, hopefully we're trying to curate, something for everybody. So like I said, whether you're a long-term buy and hold, or whether you're a short-term trader, we have something for everybody. But I think the way to think about what we do and how we differentiate from the Vanguards and the BlackRocks and things of the world is we have to be different, and we have to create products that are just not your kind of generic run-of-the-mill products. So clearly, things that we offer are going to be different, or ideally are going to be unique, meaning you can only buy them from us. And so we're a product first company, which means that we have to come up with these ideas that no one else has thought of, and try and get new segments of the market, or open up new segments of the market. And so whether we're doing longer term investing through the likes of DRUP HIPS is another one, which again, I don't know how many of the audience like income, but we have an income ETF which pays a fixed cash distribution every month. And so that's about a 10-11% per annum yielder. And again, these are all sort of very unique strategies that have been designed for investors, but you can only get from us. So have a look at the materials. Anyone got any questions? Obviously, come directly to us with whatever questions that you have, whether it's following us on the LinkedIn's, on the Twitters, etc., or just coming to us direct through the website with a chat function. People can ask questions. So we're very approachable, and obviously, our goal is that everybody has a good experience with the product, and whether you're into commodities or income or tech stocks, whatever, there's hopefully something for everybody.
That's good stuff. Really well said, and I appreciate again your time, Will. And if you haven't had a chance to check out GraniteShares, definitely take a look at the website. They have multiple ETFs. We talked about the leverage side of the house. We talked about the longer term. You mentioned HIPS at the end, which I'm glad you did for the income. There's the commodities. There's a lot of different ways you can really kind of accent your portfolio, in my opinion. And so, of course, do your own due diligence. As we always say, we're not, financial advisors here on the Trading Triangle, but we do like to get people on like Will to talk about these, these different vehicles to conduct our trading and long-term investing. And so, again, Will, thanks again, and appreciate everything GraniteShares is doing. Hopefully, we have you on again another time here in the future.
Yeah, that'd be great. Thanks,
Awesome.
Nate, Sean, Kaye. Good to see you.
Thank you, Will. It was
Thank you very much.
Thanks for taking time on a Sunday.
Yeah, absolutely. And everybody, thanks for tuning in to the Trading Triangle and to Will Financial. Again, if you haven't already, subscribe so you can get some more great info. We get more conversations with Will in the future. And have a great trading week out there, everybody. Thanks again.
Take care.